Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look again on euro currency. So you can see that our suspicions were not in vain, and yes, the euro has turned down right here, and that's why you could understand why we talked about multiple levels in the weekly report and considered few areas that potentially suitable for taking position, because situation stands so that it is not simple right now to estimate the precise level where a market could turn up. We have intraday important levels, we have strong support on the daily, and the price action is rather stubborn, because you could see that market actually doesn't like too much to go lower, because it was almost 2 weeks to show a minor retracement to the 30% support. That was even not the major 30% support. This is minor support right from thrusting action. And since then, market already almost a month stands in this consolidation, despite that we are under strong confluence resistance on the weekly, and we're at weekly overbought area. In most cases, as a rule, reaction on the weekly overbought stands more straightforward, so it's more direct action, at least to the 30% support. But here we see a bit different story, and that's why we have to consider different levels where theoretical market could show the upward action. And the first level already has worked perfect. So you can see with this intraday ABCD pattern, OP target market has shown 618 pullback. But after that, it has turned down again. Well, maybe we will get a direct upward continuation right from here. But as we said yesterday in the video, that combination of the confluence resistance on the weekly and weekly overbought suggests deeper retracement. So technical factors here stands in favor of deeper retracement, at least to the 111 maybe. So that's what we have from the technical point of view. At the same time, since we have a lot of bets on the table, I mean significant upward continuation, we can't ignore the minor secondary levels as well, because it could happen so that market will turn up from some secondary level. And in the previous few sessions we worked with this level, it's shown nice bounce up, and currently market stands at the point where we get the answer whether we will get direct upward continuation or market will get lower. So our entry point here was good, and we have got the possibility to move stops to the break even. Actually, we have turned it to the riskless trade, and yesterday we talked about it with this upward action. But currently, it's a very important moment exists, because if you remember, yesterday we talked about this possible head and shoulders pattern, and we said that you could decide what to do next, depending on your trading style, depending on the time frame that you are trading on. But definitely, what you have to do is keep stop orders at the break even. So we've actually called for grabbing at least the half of the profit by the few reasons that we just have discussed. So on the way down, we suggested that market probably should reach deeper level, and now it actually comes to it. If market will break this level, as you will see it on the hourly chart a bit later, we should be ready for a downward continuation and maybe reaching right to the 111 level on a daily chart. That will be next stop on a daily chart, because it's really very strong support area, and that's our primary area where we intend to consider taking the long position. Ultimately, maybe some spikes are possible for 50 pips lower to hit the XOP target and minor 618 support, but not necessary. So our next step in our trading plan, if market will fail to hold this pattern and fail to reverse up, this will be watching for 111 area. So currently, you could try to take the risk and trying to buy, but in this case hardly you will be able to turn trade to the riskless. it's bring you to additional risk, because here we have just minor support. You can see on the hourly chart. I will show you. Here, that's our story from the yesterday. Market has completed perfect ABCD, if you remember, OP. Here we are watching for the ABCD. Our OP has been hit. That was also confidence support. And we said that you could consider taking the long position here where the moving stops at the break-even. Indeed, reaction here was strong to the OP. It's, well, not really bad pullback, more than the 30 pips up from here, more than enough to move stops to the break-even. But then market continues up or downward direction. Now it hits the agreement XOP and major support here 112.37. Well, theoretically, from the standpoint of the hand and shoulders, it is possible to take the long position here with the stop slightly below it. But this is minor level, and we have less probability that we will get the pullback. Market just could break it down. And here we have few chances to move stops to the break-even compared to the entry here or even right there, because there that was at least the confidence support in agreement. That's not even the confidence. So that's why, well, you should understand the risk if you would like to take the long position. Another moment that I do not like, if you'll take a look at the cable on the daily chart, you will see that recent session was the reversal one. So you can see that market has formed here reversal day, and that's just deeper downward action here. Yes, in recent time, the correlation between the cable and the euro currency has diminished significantly. But still, both of them are traded in relation to the United States dollar. And, well, at least if even euro will not drop as a cable, overall decreasing of the rival currencies will press on the euro as well. It doesn't let them to show real reversal. So, and finally, the moment that I talked in the beginning of the video, that combination of the weekly overbought and confidence resistance, it still suggests a bit deeper retracement, guys. So that's why theoretically you could try to buy on this head and shoulders, and maybe you will be correct. In this case, you will get the perfect position. But on the background of all the stuff that we have talked, if you do not have the long position already with a break-even stop, well, it would be better for you, if you still would like to buy, wait when the reversal will start. For example, if market will turn up and then trying to buy on the minor retracement. In this case, your possible potential loss will be smaller, and you will get at least the confirmation that market hasn't broken this level. You will see the reaction. Maybe some even bullish pattern starts to form here on lower time frames. So, but as I said, it's more risky right now. So that's our view on euro currency. So if you have the long position with a break-even stop, for example, here, you could still keep them because market still has chances to reverse up. If not, it would be better to wait either for a clear reversal situation right here, or waiting for 111 strong daily support. That's our primary area to consider taking the long position. That's our current view on the euro currency. The taking position on the reverse head and shoulders here is not forbidden. You could do this, but you should understand that currently you have fewer chances to protect your position with a break-even stop, and chances on the loss of this trade are more significant. So that's our view on the euro.